Euro dollar tanks to a 5-week low. And we talked about it. We said it was headed down. Could this be the moment to buy the dip, or is more pain coming for euro dollar longs? All right, stick with me to find out what's going on today. Welcome back, everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these absolutely insane markets. If you like what you see, please smash the like button, hit subscribe, share my videos far and wide. I'm looking to build a huge trading community. All right, let's get started straight away. Euro dollar making some waves this morning. It's right now 10:01 a.m. Eastern Standard Time on May 13th, 2025. Euro dollar broke the weekly support level at 111.06 and just dipped down to 110.65-ish. It's got main resistance on the week at 111.80. Now, it showed some signs of life right now. However, I still think that the euro is still under pressure for the day. All right, so we came up off the low. We came up, kind of close to that resistance point. So right now, as it stands, it's got to hold that 111. Let's see. Yeah, I would have to say it has to hold 111. I'll give it a little room. I'll say 110.90. 110.90 right there. It's got to hold that level to potentially show any strength. If it breaks through this 110.90, I do believe that it is drifting a little bit lower than this 110.65 that we held. It's got room to get down to like 110 the figure. So right now, if there's resistance up here at 111.85, there's support at 110.90. A breakdown could actually send us a little bit lower to maybe 110 the figure. CPI data came out and it's basically as expected. So if I look, see if the data pulls up over here. They already took it off. It basically came in as expected. So it really wasn't. What does it say here? Dollar falls, futures up, U.S. inflation, whets risk appetite. I don't know. I don't know what that's about. But anyway, let's get rid of that. Can I get rid of it? Yeah, okay. The CPI came in as expected. Wasn't really showing like, oh, you can cut rates right away. So I talked about this before. I talked about M2, the money supply. The money supply is extremely huge. After COVID, or during COVID, they injected so much money into the system. So US M2 is really flooded. So I'm thinking, other than just the political nature of the Fed, if they're going to do the best for the U.S. economy, and assuming that they're looking to do the best job they possibly can do, I don't believe there's really a reason for a rate cut because of all the liquidity that was entered into the marketplace during start of COVID and through COVID. I mean, trillions of dollars were printed and put into the market, into the money supply. Now, money supply used to be, the way that they would target rates. And they, in like 1995, they switched from money supply to like just straight up Fed rate targets. I know the Fed is looking at money supply. I mean, they're definitely looking at it. They're seeing, the exponential growth, but there's no real velocity of money. So in other words, the economy hasn't picked up yet to absorb all that liquidity that's in the market. Now, if it does, then there's no real reason either for it's a double-edged sword. Like if you cut rates, it's not going to really do anything. But if velocity starts picking up, you have to be concerned with real inflation. Now, we had inflation under the last administration due to the things that they've done. Due to things they did, I should say. If you really look at, like, they cut off U.S. oil production, they just did insanity, just complete insanity that would really hurt the economy. So looking at the best side of the Fed, I think that they're right not to do anything. So that means nothing has changed. So really, euro dollar kind of under pressure. Sterling dollar also under pressure. Now I'm going to be doing sterling and euro and sterling yen and euro yen in the next video I do right after this. But as it stands right now, I would, if I was short term trading, I would look to sell the pair, sell this currency up right near this resistance if we can potentially get a pop up there. If not, we're breaking down through this. Now, this is a 4-hour chart. We're breaking down through this high down close bar. So if you wanted to front run the breakout, if there was going to be a breakout, I would look at this bar's close, like 111.10. If it broke that, I would say, okay, I could try to front run it for the break of 110, say 90, to get me down to like 110.45-ish. That's the way I would handle it. So that's what I got going on for you guys right now. If you like what you see, please hit the like button, subscribe. And remember, you could always go over to Park Avenue Trading, get yourself a free ebook. And remember always, as a short-term trader, enjoy the party, but dance near the door. Cheers.